Hello everyone, welcome to my video. For those of you who do not know me, my name is Lenka Joseph. I am an enrolled agent admitted to represent taxpayers in front of the IRS. So, in my last video, I spoke about what an audit is and the different ways you can get audited. So this video is really the follow-up to talk about the five ways to avoid getting audited. So before we start, I just want to put that out there. There's no really proof way to avoid getting an audit. But if you do the following, you can make sure that you can reduce your likelihood to get a visit from the IRS. So one thing that you should make sure that you do is to account for all your income. So the IRS use the information on your W-2, 1099s, and such to compare the income and deductions that you report for yourself from information that others report for you, like banks or your employers or different businesses. So any discrepancies between what you reported and what others have reported, like a W-2 or 1099 or and such, is going to be a red flag to the IRS, and they're going to want to do further investigation to find out like where is the error coming from. The next thing that you want to do is when you are filing your tax return, to make sure that you double check your return. So one thing I know, especially me as a taxpayer, what I do is that I do send the information when I finish filing the return. I send the taxpayer summaries just to make sure they double check everything, the income, deduction, all the expenses, to make sure that everything is accurate and everything provided to me is accurate. The spelling of their name, the middle name, that's a big one. Their middle name, and your social security number, to make sure everything is accurate, so it doesn't not only get sent back and are not accepted, and you might miss the deadline just because of that, but also that you do not get let's just say on the back side of the IRS and get a second look from the IRS on your return, and get audited. So one thing that's very recommended also is that to make sure that you do not omit any income or use over-report deductible expensive, especially if they're not true and if you did not have that amount of deductible expensive throughout the year. So a good tip is to really hire an accountant, a bookkeeper, to help you keep up with those, to help you keep up with your receipt and categorize and organize everything, and stay ready and compliant when it comes to the tax year. And another big one is that, so when it comes to your book, when it comes to accounting, there's a lot of things that are taken as expenses that are not necessarily expenses when it comes to your tax return. So that's another big thing to watch out for, and make sure that you reconcile your book at the end of the year to match what would be deductible when it comes to your taxes and that. Now, on to the 5 ways on how to avoid getting audited. The first one is maintain organized records. So we just spoke about that before. The first one is really categorizing everything the right way in the beginning, so by the end of the year that everything is categorized the right way. And also it helps you when it comes to if you're filing your own tax return, or if you using an accountant to help you file your tax return, that everything is there and ready. And when it comes to inputting everything and filing everything, that everything is where it's supposed to be, and not having to go back and forth and find out, what's this and what's that, and if that's even deductible and what was it used for, to make sure that it's actually deductible. So doing that, and throughout in the beginning and throughout the year, save a lot of headache and still a lot of manpower, and a lot of more money in your pocket, so you don't have to pay more to get your taxes done, and because you were compliant, you were efficient throughout the year. And also, if in any case that the IRS they come and knock at your door and want and you're getting audited, it really shows the IRS that you are a legitimate business, that you're keeping a good record of all your documents, and it goes to a smooth audit instead of going there and going that, because there are sometimes, like I mentioned before, some stuff are not deductible when it comes to your tax returns, and sometimes the an IRS agent can be like, hey, this is not deductible. We're not gonna accept that as an expense. So having all the documents, having all your receipts together, really shows that, hey, I'm legitimate, I'm organized, and I'm ready. And everything I did on everything I put on my tax return, I had a good reason to put it, and I wasn't trying to be fraudulent or anything. So the second big thing is to separate your personal and business expenses. So a lot of people use their personal bank account for the business bank account, or they use their business bank account for the personal bank account, vice versa. So what that means, what I mean by using the business account for the personal bank account is that some people, when they have a business bank account, they just use it as a personal bank account. They either buy personal stuff or pay their bills and personal bills and whatnot on it, and so that does not really separate. It doesn't separate you from the business. So you are really legally required to manage your business's personal expenses in separate accounts, just to make sure that you're not reporting or deducting personal expenses in your tax return as business expenses. So the third thing is certain types of deductions have been taught to be a hat buttons for the IRS. So that's usually the mileage deduction is a big one. That's why nowadays there's a lot of apps that helps you track your mileage. I would really recommend that you do use one of them, because you want to be as accurate as possible, because that is a big hot buttons for the IRS to audit individuals. And then again, sometimes the IRS will audit just a part um, of your business, like of an expense. Like let's say that you did take mileage deductions, and they just want to find out, where did you get that number? How did you come up with that number? So that's another thing. So that's why, again, you don't know what they're looking at, and sometimes they're looking at one thing and they look at your whole tax return altogether. So that's why some deductions that are very sensitive, like mileage deduction, which is auto, casualty losses, bad debt deductions, and business that show a lot of losses are more likely to be audited. So business that show a lot of losses. So, and then again, as a business, if for 3 out of the 5 years during your business, as a business, you show losses, the IRS will deem your business as a hobby, which means that you can't really deduct any expenses from that. You will have to report the income, whatever income received, but you can't deduct the expenses. So that's another thing. A lot of people are trying to show that they have losses in their business. That's not necessarily a good thing, but when it comes to the IRS side, because they're like, hey, this is just a hobby. Obviously, you're not trying to make any money from that, and you're just deducting expenses. So this we're gonna deem this as a hobby. So no more expenses for you. And then the second thing is, if you are trying to get credit a loan from banks, or you're trying to grow your business, it's not necessarily a good thing. That especially during the pandemic, I saw it a lot, that a lot of business, because they are reporting a lot less income, taking over deducting on the tax return, and they're reporting a lot of losses, and they could not get the loans that they needed to to help to keep them open during the pandemic. So that's another thing to think about when it comes to that. And then again, the fourth thing is a mismatch. So a mismatch really send up a red flag. That is why, for example, if you do get a 1099 or do get a W-2 that have one thing, incorrect income, um, and or the incorrect name or whatever it is, it's really recommended that you go back to your employer, to whoever it is, and fix it and issue you another document, because that does trigger a red flag with the IRS when the information provided that you provide doesn't match whatever information provided for you by another third party. And then the fifth thing is not reporting cash income or omitting other income. So that is another big thing. So a lot of businesses, especially when it comes to my contractors, a lot of you guys do get paid with cash, and some of you think that you're not required to report those cash income, which is not true at all, because the IRS have been able to audit certain businesses and find, able to track those cash received. Because again, whoever is paying you, you do not know what how they're if they're reporting it. You do not know how they're keeping track of it, how they're documenting it. So not reporting your cash income, especially businesses that, like, again, that's why contractors are one of the top industries that get audited by the IRS, because a lot of you guys get paid with cash, like plumbers, landscapers, and all that good stuff. So the IRS know who are more likely to get paid with cash, and trust me, they probably keeping an eye out for you, because if they do use a system to figure out how much the average businesses in your area are reporting, and again, if whatever you're reporting is out of the norm, that would be a red flag. So I hope this video did help some of you guys. And if you guys have any questions, and if you have received any letter from the IRS and you want to book a consultation call with me, I'll be more than happy to assist you, or with any other questions as well. So I hope this video helped, and I'll talk to you guys soon. Bye.